If you want to become a millionaire, you have to educate yourself. There's no millionaire out there that didn't, especially in real estate, that didn't have some sort of education. And every time you level up that evolution, you're going to have to change your identity a little bit.
Welcome to the Small Steps, Big Wins podcast, where I'm dedicated to helping you take control of your life. I'm Sue Saller, and I'm excited to be your host on this journey. I'll be bringing you inspiring stories, practical tips, and expert advice to help you overcome obstacles, set and achieve your goals, and live the life you've always wanted. Together, we'll discover that making small changes is not only possible, but can lead to big results. Join me now as we explore the power of positive thinking, the art of goal setting, and strategies for success. Are you ready? Let's go do this. On today's podcast, I interview Whitney Elkins-Hutten. She is the Director of Investor Education at PassiveInvesting.com, founder of AshWealth.com, host of the Passive Investing Made Simple podcast, which is also found on YouTube, and a partner in over $800 million in real estate, including 6,500 residential units, 7 express car washes, and more than 2,200 self-storage units across 11 states. And she also has experience flipping over $5 million in residential real estate. Listen now as we unpack the 3 important questions she asks herself, the definition of passive investing, and exploring what it can mean for you. Enjoy today's episode. Whitney, welcome. I am so glad you're joining me today.
Well, thank you so much for having me here. This is going to be awesome.
I know. I'm looking forward to it. Everyone has a superhero backstory, and I would love to start with yours.
Oh, yeah, absolutely. Well, so currently, I am the Director of Investor Education at PassiveInvesting.com. We are a private equity group that focuses on acquiring hard-backed real estate assets, multifamily, self-storage, hotels, real estate debt. I'm also the founder and consultant at AshWealth.com. That's my own private company where I teach people how to get into real estate, either actively or passively. Anyways, I didn't start off in real estate investing. You know, I didn't go to school for this. I actually went to school in public health and stumbled into real estate completely by accident. I bought a house with a significant other, hit a home run on that house with equity, building the equity after I flipped it, after the relationship fell apart. And I realized I made more money at that investment than I did at my day job that kept me traveling about 80 hours a week. Oh, wow. And fast forward, picked up 30 single family properties when I realized, hey, if I actually want to break paycheck dependence, those golden handcuffs, have financial freedom, I needed to figure out a way to actually make these things cash flow. And so did that. So my husband and, we did some flipping projects together. We were still flipping the whole entire time while we were acquiring these single family properties. And then we had a baby girl. I was taking care of some family members. And I realized I need my time back because really what I had done is scaled myself into another job. Now, granted, I was making far more money at that second job, but I was still working my first job too. And I was like,
goodness. Okay.
I need time. I need freedom of time, freedom of choice. Heck, I want freedom of location. I want to be able to travel with my family. And what is the impact that I really want to make in the world? And that's where we decided we were going to step into larger institutional grade assets and learn how to syndicate multifamily assets, and also invest in other people's businesses and kind of figure out which of these strategies is going to win. And I'm not going to spoil the conversation here, but as you can see, I do work for a private equity group, so still kind of have my feet in both sides of the spectrum there. But really, it's the passive investing, having a core portfolio built of passive investments has allowed us so much more flexibility in managing our finances, has given us that time freedom and choice freedom that we've so desired, not to mention the location freedom. And what I get to do here on a daily basis is, educate investors on the powers of investing in real estate and, more importantly, how to do that as passively as possible so they can get the lifestyle they desire.
Oh, wow. Yeah. So it sounds like you're leveraging all your life experiences from owning single family. And I want to circle back to that in a minute, from owning single family to helping people achieve that financial independence through the education. And that's a big component too, because people hear a lot of these terms. I can go into syndication, or I can be part of a JV group, or I can put my money passively somewhere. But there's an education curve that goes on before somebody can part with, say, 50,000 or $75,000. I want to circle back around. Do you still own all that real estate?
Yeah. So, 2020, 2021, 2022 really taught us a lesson and taught me a lesson. I mean, COVID was amazing for me. I mean, not getting COVID, like that sucks.
Right.
I mean,
Right. Yeah.
but
Yeah.
in
I think
fact,
for everybody.
it's totally tragic what happened in the world. But I mean, just the social experiment of now my daughter's schooling from home, I'm working from home. Once I got past the like, why me? Like, it wasn't my choice and this was forced upon me. I was like, wait a second, this is what I wanted. And here's this experiment
Yeah.
that I get to try. But I still had all those day-to-day responsibilities of asset managing our core portfolio, trying to also asset manage a larger portfolio with partners in syndicated
Mhm.
real estate. And I found myself again in that position of burning the candle at both ends, and then a couple times in the middle. And I was like, okay, I need to figure out how to get my time back. Well, like, what is that
Mhm.
20% action that's going to get me the 80% of my result? And when I sat down and really sat with some three core questions, really led me to believe that I need to focus on passive real estate. And I was in this beautiful time because we saw a huge run up in pricing toward in single family real estate. It wasn't natural, right? This was market forces
Right.
working for us. And so we were like, wait a second, we can sell a lot of the single family real estate and either trade
Mm.
up into higher quality properties, get out of our C plus B minus properties and get some A class properties that were going to cash flow way better, or without the headaches, some of the tenant headaches, the capex and deferred maintenance headaches. And we can convert a
Mhm.
lot of this, liquidate our ATM, if you will, and
Mhm.
move that into passive real estate to where we were completely hands off. It also allowed us to diversify our portfolio because we had, we were about 40% in single family real estate at that point in time. And so
Okay.
I really saw the opportunity to get into some larger institutional grade assets that scaled, were valued different, not on comparable sale, but on net operating income, and just really, put some safeguards and bumpers in our portfolio. We're in a very different market today. Now,
Yes.
asset prices are
Yeah.
still pretty high, but it was being able to see the writing on the wall and figure out, what do
Mhm.
I need to do right now to shore up my portfolio?
Well, that makes sense. I mean, and to your point, yes, it's a little bit different in the market today, but a lot of people have replicated the last 3, 4, maybe even 5 years is going to be very difficult to replicate going forward. What were those you mentioned 3 questions. What were those 3 questions that helped you cross the precipice and make you realize, "Wait a minute, single family portfolio that I was managing is there's gotta be a better way than this." So
Well, so, keep in mind in this time, I was working at a private equity firm. I was a
mhm.
minority partner in some syndicated real estate. And I went out and was sitting down with one of the partners. Our families are together. It's a lovely afternoon, in the California sun. We're just having a grand old time. And I just turned to one of them and I said, hey, listen, what's going on with all your property? She had at that point in time, I think 40 duplexes,
Mhm.
or sorry, 40 units, 20 duplexes. She was like, "Oh, I sold them all. I got the last one." I'm like, "You're what? What? You can do
Talk
that?"
to me about that.
Yeah. And I'm like, "Well, what are you doing with it?" And so it's just this amazing conversation ensued. And my husband and I just kept making these sideways glances with each other, because that whole entire week that we've been on vacation, even though I had property management in place, I was still managing the property manager. I had
Mhm.
told the property manager, don't call me unless something's burning down. And
Mhm,
sure
and
enough, like, he's calling me for a tenant issue, a utility issue. Home Depot didn't
mhm.
deliver the right washing machine to this other property. I had to call them because it was on my credit card, blah, 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 blah. And I'm like, I don't want this, right? And funny enough, at the end of this vacation, I had it on my calendar, sit down and ask these 3 questions. This was my quarterly process. And I sat down, and this time when I opened up the questions, the first question is, what do you want? And I was like, I don't want to manage people or processes anymore. That is what I want. I want my time back. Now, I don't pretend that we have other active businesses that I fully control. And, I've put all of the processes in myself. I'm not relying on somebody else's processes. And so for me, that kind of feels better. But that first question, what do you want? And that thing is, every time you move the goalpost, that's why I say you have to ask these questions on a regular basis, because every time you hit a milestone and move the goalpost, what you want is probably going to change or modify a little bit. Because especially if you start thinking larger, right? What do you want? You might just want $1,000 coming in every month, right? So you can pay off some bills and take the family on a cool trip or take them out to a nice dinner. But as you start scaling your income, $5,000, $10,000, $15,000, $20,000, $25,000 coming in a month, that want changes. The second question is, why do you want it? And the first time that people start asking that question, they're probably going to tell you what they don't want. And that is what they're running from. So that's the fire under their rear right now to get them out of that pain. And unfortunately, we are more motivated by pain than we are by pleasure as a culture. As humans, really. Not just unique to us, but it's just as human beings.
Right.
But really, you have to start digging down, because if you start making decisions on building your portfolio and investing based on what you don't want, you're going to find yourself like, shiny objects syndrome all over the place. Right? You have to dive down in to figure out what you do want. And it generally boils down to 5 core freedoms. Now, I don't want to rob anybody of this process. Financial freedom, time freedom, choice freedom, freedom of location, freedom to create some sort of impact in the world. That's generally the 5 areas that people land on. But generally,
I was going to ask you, what does that question mean to you? Like, how would you answer that? How did you answer?
I want to be with my daughter. I want to, be with my family. I want to take vacations. But then why do I want to do that? Because I want to build experiences in life. Why do I want that? Well, I didn't get those. And I'm just going through my whys. I didn't get to have those experiences with my dad. And by the time he was able to retire, he was very ill. So I feel kind of robbed of those. Well, okay, then why do I want to build those experiences? Why is that important to me? Because I was robbed of them. It's because I don't want to pass along that trauma to my family. Time's now. It's the time for me to do it now. And so you see where I'm going. You're digging down, and eventually you're going to hit financial freedom, time freedom, choice freedom, freedom of location, freedom to create some sort of impact in the world. That's generally the 5 areas that people land on. Okay, but now you know what you want, or have some idea. Why do you want it? The third question is, who do you have to become to get this? And again, every time you change that want and modify that want, who do you have to become has to change too. Your mindset has to shift. You have to acquire new skills or bring new people into your world that have those skills. And then you have to create new networks. Maybe it's a mentor or a coach or a community. Or just going to conferences, bringing those people into the world so your world conspires for you and you don't feel like it's conspiring against you. So, but again, those things are they're moving pieces. They're not stagnant.
Right. It looks different for everybody. And you bring up a really good point about, it's who you have around you. Because a lot of people take their identity and like, well, I'm a cashier or I'm a teacher or, you fill in the blank with that. But when, like you said, when you really dig down deep and go down 5 levels of why, and you keep peeling that back, then as you said, you realize you have to go seek out other people. Because if you want to become somebody, if I want to become a millionaire and I hang out with broke people, I'm not going to become a millionaire. I got to go find out what millionaires do. Or if I want to be a passive investor, I need to go hang around with passive investors.
If you want to become a millionaire, you have to educate yourself. There's no millionaire
Correct.
out there that didn't, especially in real estate, that didn't have some
Mhm.
sort of education or network or paired with operators or paired with real estate brokers or whatever. They didn't do
Mhm.
it on their own.
That's
It's
right.
very relational business. And every time you level up that evolution, you're going to have to change your identity a little bit. You have to, this is one of those things, like, I think as a culture, I can speak for myself, my identity was completely tied to my job. I think we're conditioned
Mhm.
to do that, especially going through the educational system in college and
Mhm.
everything like that.
Yeah.
We're taught to tie our identity to our job, our self-worth to our job. But as investors, there's this, we, first of all, in our job, we don't have to do that. But as investors, we get to
Right.
unhook that identity.
Mhm.
But we have to, okay, if we're going to become an investor, now it's like we get to pursue this want and this why.
Mhm.
We have no identity, that self-worth of the job giving this to us. So we have to become somebody else. And who is that person? What mindset do
Mhm.
they have? What skills do they have? What network do they have? And then go get that. The cool thing is, I love the quote, Tony Robbins said, success leaves clues. So the first thing you go do, just like you've done, Sue, is you read, okay, great. I
Yeah.
want to become an amazing passive investor. I'm going to reach out to the
Right.
people that I'm seeing in my network, or who say, who my network says are the go-to people. And let me start there and have a conversation.
The beauty of passive investing is that it frees you and correct me if I'm wrong, it's going to free you up to do those other things that you want to do. So you're putting your money to work in the real estate realm, but you get to do other cool things while your money's working for you. Did I sum that up pretty well for passive
Yeah, yeah.
investing?
When you truly, so a lot of people say real estate, especially if you're doing buy and hold real estate, it's all passive. Well, there's
Mhm.
passive in terms of income and there's passive in terms of your time. So what I'm talking about is
Correct.
investing in other people's deals, private equity deals, to where the operator is running the asset, not you. Now, I want to, if I can, just do like 60 seconds of
Sure.
education here. When you
Absolutely.
transition as a passive investor, you get to one, you have, first of all, you have to understand your goals. That gets back to the what do you want, right? You
Mhm.
have to understand your goals. You have to understand your risk tolerance, because you're handing over that operational control to the operator. And that means, what do you as a passive investor get to control? You get to control the operator you invest with, the market you invest in, and the deal. And I have a beautiful education system and a webinar that I do weekly that's called Passive Investing Made Simple. If anybody wants to join that, totally free, you can come drop
Nice.
in. We pick apart all things passive real estate. But the thing that you hit the nail on the head, Sue, what passive investing allows somebody to do is to create leverage. Okay, because they can invest in somebody else's deal where that person is the strategy expert. I started investing in
Right.
hotels. I didn't know much about hotels. Um, so I started investing there. I didn't know much about car washes. I started investing there. I was an expert in my lane, and I wanted to stay in my lane. I
Mhm.
didn't want to have that shiny object syndrome, but I wanted exposure to these other asset classes. How do I do that? I go
Mhm.
find the best of the best of the best and invest with them. So you get to leverage
Makes
their
sense.
knowledge, their ability to find the market, put together the team, brokers, lenders, tax, legal, all of that. You get to leverage their ability to secure credit and lending, which right now I'm really digging, because I'm not on the loan. I have, my balance sheet is largely
Mm.
de-risked. I have my capital out there working for me.
Mhm.
That is an exposure, but I don't, somebody slips, trips, and falls on one of my single family properties, they can go after me. Somebody slips, trips, and falls on the multifamily property, I'm insulated
Right.
a lot better there.
Mhm.
Also, you get to leverage their network and their teams that they built. Like for us, we have over 30 employees, team members that are working on behalf of our investors to not only
Mhm.
acquire the deal, asset manage the deal, manage day-to-day operations, all the finance piece, 1031 exchanges, cost segregations, all of that on behalf of the investor. And guess what? My next trip to California or wherever I go, I'm not going to get those calls from the property manager. I'm not going to have to make those calls to Home Depot. I get to fire both of them. I get my time
Yeah,
back, and I get to share
me
in
too.
the cash flow and the profits of the asset.
There are those of us out here, like myself, I have a math degree, a math background, and I can run the numbers till the cows come home on single family, multifamily, medium term rentals, even commercial. I've done self storage analysis. I mean, I can run the numbers, I can see the money coming in. When I think about passive investing in what you're talking about, where you hand the baton off to someone else to do, what goes through my mind is like, I can get a bigger, better deal if I do it myself. What advice would you give to me where I can see the one hand, and I want my freedom of time. Like, I love to do podcasting. This is what I would love to do, and be able to
Mhm.
travel and do what I want to do, and allow my real estate to do what it's going to do. But I don't want to get a phone call right now, telling me that, my water heater burst.
Well, there's a lot to unpack there, and I'll just share a funny
Sorry.
story. I was doing a podcast with myself yesterday, and we still have some, personal real estate, controlled real estate that we hold. And I'm not saying liquidate everything, get it in passive or
Yeah.
bust. That's not what I'm saying. I'm just saying you have to understand what you want and why do you want it, and
Mhm.
ruthlessly evaluate your assets. And if they aren't giving you what you want, that
Mhm.
time freedom, that financial freedom, that location independence freedom, do they have a space in your portfolio? Now, for me, my single family investments had a space in my portfolio until the point that I didn't need them anymore, until I had that foundation built up in my passive portfolio where I'm golden. I can flip this switch, right? Because
Mm.
my
Mhm.
single family rentals covered all of they had us financially independent, right? So there's financial security, financial vitality, then financial independence, right? We
Mhm.
could live our current lifestyle with the income that was coming in from our single family rentals. For me to flip that switch, and I wasn't a high income earner. I had to do it that way. For those
Mhm.
people who are high income earners, have their own businesses, legal,
Yeah.
maybe legal doctors or, tech workers, your
Yeah.
highest and best use is probably in your job, and funnel that active income into passive real estate.
Mhm.
You don't get a gold star for starting off as single family rentals. You don't have to. But for me, that was what I needed to do to build up equity to be able to invest in single family rentals. So as I
Mhm.
continued to transition all of that income, as much as we could get, all those refinances into the passive side of our portfolio, and then I sat down and I ran the numbers. I have a degree in epidemiology, very numbers and stats focused, like you. I went,
Yeah.
holy smokes, we're financially independent and passive invest in all of our passive investments. What do I want again? That question, those core questions keep coming up. Who do I need to become to get it? Right? I had to break that
Mhm.
mindset shift, right? We talked about unhooking your identity. I spent
Mhm.
years building my single family rentals. Those were my babies. I blood, sweat, and tears over there. I had to
Yeah.
unhook
Yeah.
my identity again to sell off a large portion of that portfolio. And it took me 4 years to do it, to get it all, or 90% over to passive investing. So it wasn't
Mhm.
all in one swath. I
Yeah.
think what was the Rubicon that we crossed was that conversation, back in California, where we're sitting there like, oh yeah, we could totally do this. We could totally sell them. But for
Mhm.
somebody who's really numbers focused, right? Because that was the first part of your question, is they can tangibly see the numbers and that they might make more cash flow. They might make more equity in acquiring an asset in themselves. Now, maybe in single family, maybe in small multifamily, or doing the asset themselves. Yes. And I guarantee you there's one column you are not analyzing, one return you are not analyzing, and that is the return on your time. I challenge
Mhm.
anybody
Fair.
to figure out how much time they're actually spending on their portfolio, or if they're leveraging out and hiring people in, how much their payroll is to do that, and figure out that return per hour. Because when you passively invest with great quality operators, great quality markets, and great quality deals, I guarantee you're going to make more. And I sat down and I did those numbers. I kicked and screamed. I was like, oh, I don't want to do this. This is a lot of work. I got to bend my brain to figure out how many hours I actually put into this rehab project. And when I did that, I was making great money, maybe $500 and $1,000 an hour between cash
Wow.
flow and equity on my single family rentals. But for the effort that I was putting into the passive deals, I was making 50, 75, $200,000 an hour.
Wow.
It
Wow. That's a
works. So
big
again, it
difference.
goes back to how do you want to
Wow.
spend your time?
Yeah,
But people have
right.
somewhere, right? And the biggest thing, kind of piece of advice, you asked me for a piece of advice, is
Mhm.
don't get stymied. Take action, right? If you buy
Okay.
single family rental, if you're sitting here listening to us and you're like, man, I don't know about this passive thing, but I can get the single family rental. Great.
Mhm.
Go do that. Because at some point in time, you may love it. You might want to scale it, or you may go, wow, I don't like this. I'm going to reposition. Well, you created drag.
Mhm.
Yeah, but you've gotten started, right?
Yeah. Yeah. That's the beautiful thing of real estate. I mean, you can pivot. So just to go out there and do, and you make another great point too, just to go out there and do something. There comes a point where you just have knowledge, knowledge, knowledge. You just keep learning, learning, learning. At some point, you have to just face the fear and say, okay, it's and position people around you, get the education you need, and then just go do it.
I'm a big fan of core
Right.
investing principles. And so if
Mhm.
somebody's stymied by fear and they've worked through the mind, well, for one, if they're stymied by fear, there's something in that mindset, skills, and networks you haven't solved.
Right.
And maybe if you're like, man, my operating software, my mindset's all solid, I know what I need to do, but take a look at your skills. Do you have the analysis skills down? Do you know how to find operators? Do you know how to find deals? Do you know how to vet deals? That's where I can help you do it at Passive Investing Made Simple, that webinar, that class that I do. I'll leave people with this like little pearly nugget is right now there's a lot of people, operators, and I shouldn't say operators, but people they like generating fear because, right, we are motivated to run from pain, okay, to get out of
Mhm.
pain. But I want to let people know that you don't have to be fearful, even in today's market, even in this chaotic environment. Are we in a recession where the inflation's out coming down, but we're still the Fed's still raising the interest rates, and that's learning to
Yeah.
invest based on principle. And the
Mhm.
7 principles that I always look for in any core investment that I'm going to do is it has to preserve capital. Has to. I have to know that in some form or fashion that my money isn't going to go to zero. So for me, that rules out stocks, bonds, and mutual funds for the most part.
I have to put the disclaimer in here, obviously, that nothing is risk free. You need to know what you're investing in. And this is where knowledge is the antidote to fear.
Yeah, and I'll just, for efforts of time, I'll just go through, all
Sure.
7. But preservation and capital, cash flow. Okay, I like assets that cash flow now in today's environment. If it cash flows now in today's high interest rate environment,
Mhm.
that's amazing, right? And especially if
Agree.
it cash flows with a high quality business plan in order to increase that cash flow over time, bonus for me, right?
Mhm.
There has to be a way for me to take advantage of equity building. Now, there's market appreciation, and then this is why I love larger assets, institutional grade assets, especially like multifamily, self-storage, car washes, is that there's a way for me to actually grow the NOI and get rewarded for it in a
Mhm.
higher valuation. Whereas if I do this was another kind of like inflection point for me when I owning single family homes.
Mhm.
It was fantastic. Like I could do a rehab, I could get more in rents, I could get rewarded in rents. I might, it'd be worth more in the market, but I was only as good as whoever sold their house the prior
Mhm.
6 months. What happens if
Mhm.
the market starts going down? I didn't really have much control over that comparable
Mhm.
sale type valuation. So I look for ways, assets to where the valuation, can be impacted by growing the income, decreasing expenses, and adding additional streams of income. So I also look for assets that have tax benefits. Can it
Mhm.
take advantage of depreciation and accelerated depreciation? Okay, now a lot of people are like, bonus depreciation, they're freaking out about it. Bonus depreciation is not an accounting method. Depreciation and accelerated depreciation is. Bonus depreciation is a tax incentive. So even if bonus depreciation winds down and doesn't get renewed, we still have accelerated depreciation. We can still perform cost segregation analysis to push that depreciation forward to the first 5 years of the project, which still makes real estate very powerful. Can I take advantage of 1031 exchanges? That's another tax benefit. Okay. Can I continue to move my tax bill down the road and potentially eliminate it if I die with the assets in place and pass it along to my heirs? That is one of the biggest reasons why people become billionaires off of real estate. And then can I take advantage of a safe arbitrage of leverage? Okay, this is the one that is like asterisk right now in today's environment. Whoever you invest with, whether you're the operator or investing with an operator, that is a must. You have to have great quality debt. This is not the time to, cross your fingers and hope the debt's going to work out. No, get high quality debt. Okay. And then can you take advantage of inflation? This is great too. Like we can secure assets in today's environment, lock them in today's dollars, because we can physically see that dollar eroding over time. We saw our cash erode 8.9% last year. Today it's eroding 6.2%. I mean, if you guys want any other better case study to lock in assets that hedge inflation, this environment is teaching you that. And then you have to invest with high quality operators, especially if you're investing passively. But even if you're not investing passively, who's the operator? You and your property manager. Your property manager can make and break the quality of that asset if you don't have stellar property management. And so those are kind of my 7 value wealth pillars is what I call them. I look for assets that take advantage of all 7 if possible, if not as many as possible, because those are the different ways I get paid. So whether the market goes up, down, or sideways, if I can invest in assets that check majority of those boxes, I'm going to win at some point in time.
Whitney, you have just unloaded lots of nuggets of information, and we have just scratched the surface on all 7 of those pillars. And I know you could continue to talk for a while on each and every one of those. At this point, where can people learn more? Because I'm finding myself, even as I'm listening to you, saying, you know what, I really want to get educated, because I'm thinking about those 3 questions that you posed earlier. What do you want? Why do you want it? And who do I have to become? Thinking about the answers to those, and then thinking, you know what? I want to learn more about passive investing. So how can we learn more?
Yeah, definitely. So you can visit me if you want to connect with me personally in 2 places, passiveinvestingwithwhitney.com. That is connected to passiveinvesting.com, the private equity firm I'm the director of investor education with. You can, come find me there. We can talk all things real estate. You can get access to my calendar there. If you're just starting out and you're like, I'm in this position where I need to build my own core assets first before I passively invest, you can find me at ashwealth.com.
Okay. All those will be down in the notes as well. Before we go, one book recommendation. What do you suggest everybody should read?
I am a big fan of The One Thing by Gary Keller and Jay Papasan. It's the one book that I read really like every single year. And every time I do, I take away another nugget. I mean, it's one of those books that's really changed my life on just thinking about my time, how you fill if time is the glass, how do you fill that glass up for, to keep your priorities in check, but also for max effectiveness, not efficiency, effectiveness. So I really love that book. I mean, I could do like a whole webinar just on that.
Well, you're welcome back anytime, and we can pick some small steps out of the one and turn them into big results for others. So I have no problem with doing that. Is there anything else you want to add before we close?
Again, it's all about taking action. So getting down to that like minute step that will move the needle. And for people who are sitting here on the fence, Sue, you said this many times, like surround yourself with those people that can help shortcut your path. And a lot of people think it's like, how quickly can I get from point A to point B? I'm talking about the people that can help you fold that paper in half and collapse time. And so I really invite people to connect with me at passiveinvestingwithwhitney.com, as well as Ash Wealth. Do something right now before the episode's over. Break out bust out your email and reach out to that person that you know is going to help you collapse time.
Great advice. Well, Whitney, thank you for joining us today. I know I gained a wealth of information talking to you, and I look forward to it again.
Well, thank you for having me.
I want to thank you for listening to my podcast. I value your time with me because I realize you could be listening to someone else right now. If you got any value or think someone else can benefit from what you heard, please spread the word, hit subscribe, and check out my website at www.suesaller.com. Remember, life doesn't get better by chance, it gets better by choice. Take small steps and make today awesome, friends. Have a great day and God bless.